Sugata Gupta, MD and CEO of Marico, joins us now. My first question to you, Sugata, is that profits have been solid on a YOY basis, but the EBITDA pressure is there. You have also given a commentary on the expansion strategy of 150 to 200 basis points in medium term. So when is that going to kick in, and what are the factors impacting your EBITDA performance going forward?
I think we just lapped a very high inflation cycle. As you know, that one of the biggest input cost, which is copra, had a significant inflation as high as almost 100%, which forced us to take a 60% price hike in parachute. Since the peak, the copra that has eased out by 25 to 30%. Simultaneously, I think we have also continue to reduce dependence on decommoditization of our portfolio, including diversification and growth of value-added hair oils, which has been unprecedented. So therefore, a combination of easing out of inflation, continued mix improvement, as well as profitability improvement of the diversified part of the business, which is foods and digital, will happen as we move into next year. So YOY next financial year, we can expect definitely a 150 to 200 basis points improvement in margin, which roughly translates into at least a mid-teens bottom line growth as a base case.
All right, the middle of next year is when you are expected to clock in that expansion in EBITDA. But most of the brokerages are of the views, Sugata, that volume growth needs to be really continued because the pricing pressure will continue. How's the demand? How's the outlook? And of course, in revenue, you're on track with the 25% that you have estimated for this year.
So I think we are already 3 quarters down when we are at 26%, and therefore 26, 27%. So this FY25 numbers are definitely possible. As far as volume growth is concerned, yes, I think the sector consumption is looking up. A combination of various things, whether it's in terms of the GST, which has been transformational in driving affordability in a lot of categories, whether it's food or some of the personal care items where GST went down from 18 to 5. Consumers want brands, aspirational brands, and therefore the affordability will drive consumption. I think the rural demand has improved quite a bit, and we have seen this trend over the last few quarters. The monsoon and the agricultural sowing season has been okay. So we believe fundamentally there are multiple vectors which will aid the consumption growth, and therefore we expect the FMCG volumes. We are in the early season of, in terms of the earnings season. And if you look at the trends, there has been volume improvement all around. And as far as we are concerned, we have been delivering high single digit volume growth over the last 4-5 quarters. And we are extremely confident of continuing to deliver this as we move into next year.
All right, in food business also, Sugata, your company has just made an acquisition of Zia Maize from PVR. What are the synergies, the impact to your overall portfolio, and when is the performance from here start showing up on your results?
So look at 4700BC. It's we are very excited about this recent acquisition. If you look at our overall foods journey, it has been focused on, most of it has been health and wellness. There was a gap in our portfolio in terms of premium gourmet snacking, and this is something which is driving a lot of consumption tailwinds because of whatever growth in OTT, people having in-home consumption of gourmet snacks, and they are better for you snacks. I think this brand has significant, in terms of headroom for growth. It will continue to be, available in PVR cinemas, but that is a small part of the business. A large part of the business has been online. I think with Marico, access to the Marico GTM, whether it's modern trade or some part of the premium food outlets, it gets access to GTM. There will be significant cost synergies with the Marico system, as well as potential synergies with True Elements, which is again a better for you clean brand which operates in the premium space. I believe this will accelerate both True Elements and 4700BCs in terms of the path to breaking even in a very accelerated manner. And also, I think we will have monies to invest behind the growth of these brands. And I'm extremely confident 4700BC in the next 3 years will become a 500 crore brand. We are currently having an exit run rate of around 140 crores.
That's right, Shogato, but also it's the digital era right now. So digital first portfolio, what is the outlook as well as growth propensity? Will international market give you that kicker in this particular segment?
As far as the digital first portfolio is concerned, we believe that it can have the potential to become 2.5x with a EBITDA of 10% plus over the next 2 years. And if you look at it there, we participate in different segments. We still have some gaps to plug, but we now have a broad-based play. We operate in premium male grooming in Beardo. Beardo is what I call a Harley Davidson of male grooming. It's around 300 crores with a double-digit EBITDA. We have Just Herbs. We have a brand, as you talked about, is True Elements, and Plix. Plix is the largest and the fastest growing brand in our space. It plays both in the nutraceutical segment as well as in the hair and skin food. And it's also profitable. And I believe that next year, Plix is expected to almost touch 1,000 crores. Now we have 4700BC. And as I said, there could be one or two still gaps in the portfolio. I think we strongly believe we are one of the very few incumbent FMCG companies that has been successfully converted itself into a digital consumer company. We are, today number 2 in terms of size as a digital FMCG company in India. And this, we also believe, has potential, this digital business model in some of our international businesses, where some countries where internet penetration is very high, e-commerce penetration is very high. So this is a capability we have honed. We have done it very innovatively, where we have taken majority stakes, let the founder run it, learn the business from them. Because at the end of the day, I think there's a lot to be learned from the founders, except that we also choose founders who have a mindset of build to last as opposed to build to sell. And they are interested also in leaving a legacy. And for us, that is important.
Also, Shogato, consumption space is very critical for the economy and the growth, and budget is just around the corner. Of course, GST reforms have added some propensity and boost to consumption. But what would be your budget expectations to boost demand and consumption?
If you look at last year, whether it's the tax breaks or the GST 2.0, both have been transformative in terms of driving consumption, especially in the middle class. And I believe this will play out over the medium term. I think there has to be continuous focus on investing behind infrastructure, generating employment, rural upliftment, and the government has done a fantastic job in that. And obviously, long term, it is important to also ensure fiscal discipline. The very fact that India has been extremely, proactive in doing a lot of FTAs in the recent times, and I believe that we will continue to be the fastest growing economy in the world. The momentum is good, and it is extremely critical that we continue to actually generate infrastructure investment behind, expansion of capacity and generating employment, which is critical for maintaining this momentum.
Right, Shogato Ghosh, thank you so much and all the best for the next quarter. Thanks for giving us the outlook on the business.